You'd be pretty upset if you missed out on your desired home over $80. In this video, I'll explain what it means and how to avoid it. Hello, I'm Frank Kenny with Living in Los Angeles South Bay. Today we're going to talk about, would you let $80 a month hold you back from buying your home? A lot of buyers today are stuck in wait and see mode right now. They're watching rates hover a little above 6% and thinking, I'll buy once they hit the fives. Because who doesn't want a better rate? But here's the thing, that 5.99 number might not save you as much as you think. Affordability is definitely still a challenge. There's no question about that. But the market has given savvy buyers a head start. Mortgage rates have already come down over the past few months, and the drop we've seen saves you more than you actually think. Before we move forward, I want to clarify that when the Fed says they are reducing interest rates, that does not mean mortgage rates. Many people think that's what it means, but the Fed does not control mortgage rates. The only rates the Fed moves affect are things like credit cards and car loans, etc. Mortgage rates are affected by a combination of other factors. I did a video on rates, so check that out for clarification on mortgage rates. Okay, back to this discussion. Let's put some real numbers to it. Rates peaked for the year in May when they inched above 7%, but since then they've been slowly declining. Now they're still sitting in the low sixes, and while that may not sound like a big deal, that change translates to real dollars. According to data coming out of Redfin, the typical monthly payment on a $400,000 home is already down almost $400 since May. You can multiply that out for higher home prices, and that means if you're buying a home now, you're already saving hundreds of dollars every month compared to what you would have been able to get earlier this year. That's real money that makes real difference for buyers who pause their plans because they thought home ownership was out of reach. And while it may be tempting to wait even longer to see bigger savings, that's a gamble that could cost you. Here's why. For starters, most experts say mortgage rates are likely to stay pretty much where we are today throughout 2026. So there's no guarantee we'll see a rate much lower than what we have now. Only one expert forecaster is saying rates could fall into the upper fives next year. And even if rates do dip below 6%, the extra savings you're holding out for won't move the needle as much as you might expect. So, what's the real math behind a 5.99 rate? Well, let's break it down. If rates come down to 5.99 from where they've been lately, that's a difference of only about $80 a month on an average price home. Give or take a bit based on your price point and the rate your lender quotes you. Now check out this chart. Now, $80, that's it. And for the typical family, that's about one dinner out. That's not enough to change the game for most buyers I've talked to, but the savings of nearly $400 we already have compared to when you paused your search in the spring. That might have been worth the wait. So the question to ask yourself is this: is an extra $80 savings really worth the wait? Because while you're holding out for that small dip, the bigger opportunity might be slipping away because it may be the right house for you, another buyer might buy it, or the fact that prices are continuing to rise can eliminate that 80 bucks pretty darn quickly. And when rates fall, competition follows. And right now you have more homes to choose from and sellers who are ready to negotiate to get a deal done and fewer buyers to compete with. But once rates fall below 6%, buyer mindsets will shift quickly and all of the pluses of the market will change very rapidly too. The National Association of Realtors, NAR, reports that if rates hit 6%, about 5.5 million more households will be able to afford the median price home. Even if only a small fraction of them decide to buy, that could mean hundreds of thousands of buyers getting back into the market. It's just more buyers for you to compete with. And that creates more competition for you, which would push home prices even higher, most likely canceling out the extra savings you waited for. So if you're waiting for rates to get below 6%, just keep in mind that extra $80 may not be worth it in the grand scheme of things. The bottom line is you don't have to wait for the $5.99. You have the chance to move and save right now. So ask yourself, would you let $80 hold you back from buying a home? If you find a home you love and the math makes sense, getting ahead may be the best strategy. Connect with a professional realtor to run your numbers or give me a call and I'll help you work out that decision. That way you can see what you're working with in your market. Please like and subscribe so you're guaranteed to get all of our current helpful videos, and please feel free to share these videos with your family and friends. This is Frank Kenny with Living in Los Angeles South Bay, and I will see you on the next video.